There's light at the end of the tunnel, or is there? That's certainly what Rishi Sunak and Jeremy Hunt are saying. Inflation is falling, said the Prime Minister this morning. But we're not at the finish line, and we must stick to our plan. So what are these inflation numbers? We know that the Consumer Price Index, headline inflation, it was up 7.9% in June 2023, and it was up 6.8% in July. Still way above the Bank of England's 2% target, but steady progress towards lower inflation. We do have in this country the highest inflation in the G7 advanced industrial countries. Our 6.8% compares to July inflation of 5.3% in the Eurozone and just 3.2% in the US, where energy is much, much cheaper. Food price inflation is down, but it's still a major problem. 17.3% during the year to June. That's what a basket of food will have cost you more. But it's 14.8% during the year to July. A significant reduction, but still much, much higher than it should be. Many economists focus on something called core inflation, including economists on the Bank of England's Monetary Policy Committee. That remains stubbornly high, unchanged between June and July, still at 6.9%. But I'd tell the economists on the MPC to focus instead on producer price inflation. That's the cost of the inputs that firms need to make the goods and services that they then sell to us. Producer price inflation is now actually negative, minus 2.9% in June and minus 3.3% in July. Yes, that's right. The inputs that firms use, the price of those are actually falling. So surely those cost reductions should at some stage be passed on to us. So what will the Bank of England do when it meets again on the 21st of September? We've had all those interest rate rises since we came out of COVID lockdown, 14 of them in a row. We're now at 5.25%. It strikes me that this reduction in inflation isn't enough to stop the Monetary Policy Committee from raising rates again later this month. These rate rises, they're good news for savers. If you've got some cash stashed in a bank, eventually the high street banks can and will pass on those rate rises to you. And it may be, even though the Bank of England's got to raise interest rates again, that the mortgage companies start lowering them because they're sensing that interest rates will soon peak and they will then be lower in the future. So we are still an inflation nation here in the UK. Our inflation is still high. We must stick to our plan. It's working, says the Prime Minister and the Chancellor. But will it work quickly enough?
And that is the big question. What do others think? Well, despite inflation coming down, Shadow Chancellor Rachel Reeves, as you might expect, is still critical, pointing out that it's no real victory. As she says, after 13 years of economic chaos and incompetence under the Conservatives, working people are worse off, with higher energy bills and prices in the shops.
Labour's plan to build a strong economy will make working people better off by boosting growth, improving living standards and cutting household bills. Well, Liam, has she got a point?
She's definitely got a point. Look, inflation is still too high in this country. As I just showed you there at the video wall, our inflation compares to 3.2% in the States, 6.8% here. Why? The main reason is energy prices. Even though lower energy prices, in particular the lowering of the Ofgem energy price cap, that's contributed to this fall in headline inflation in the UK. In America, firms, households, their energy costs per unit, their electricity costs per unit, just 1/3 of what they are here in the UK. That's a major reason why our inflation is still high.
So when we hear that this inflation's come down today, does that mean for the average person that they are going to be left with more money in their pocket?
OK, it depends on their income. Now, we know from yesterday that wages are going up faster than they have at any time in the last 20 years. In the public sector, wages went up 9.6% during the 3 months, April, May and June, compared to that same quarter, that same 3-month period, Pip, back in 2022. So if you're lucky enough to have had a wage rise in the public sector, your wage rise is now beating inflation. So that's what we call a real terms increase in your wages. And across the economy as well, the average wages went up by 8.2%, which again is higher than this latest inflation number. But the trouble with averages, Pip, is that many people don't live in the average. They live at either extreme. Many people, particularly those working part-time in the gig economy, maybe who have to work casually for extra cash, they won't have got pay rises. And their cash is then being depleted by inflation, and still by 6.8% inflation, which, as I say, is much lower than it was, but still chunky.
And it's worth pointing out, Liam, Labour analysis of ONS figures today show that people are actually 350 quid worse off a month because of stubborn prices on food, transport, fuel. There's a 7 times higher ride in food prices than a year ago at 14.9%. So it looks good on paper, but in terms of pounds and pence in the pocket, people are still feeling the pinch. And that's before your predicted interest rate again in September.
I still think this food price inflation number is, I use this word advisedly, outrageous. Yeah. I really do. Yeah. I'm meant to be an analytical guy. I try to be. I don't just use a word like that for no reason. Yeah. 15% food price inflation. Yeah. I live outside London. Many of my mates I meet in the pub at the weekend, they're farmers. They tell me fertiliser prices have come down, fuel prices have come down for them. They tell me the prices they're getting off the supermarkets are coming down because the farmers' costs are coming down. Are we seeing those price reductions? Not just lower price rises, not just a fall in food price inflation, actual reductions in our supermarkets? No, we're not. The supermarkets will deny wrongdoing. But I'd like to see ministers not imposing price caps. I'd like to see them publicly calling out supermarkets, not just a friendly cup of tea in Downing Street.
Show us your margins.
Properly calling them out, because we need to get the cost of living crisis under control. We're a step closer to that today, but by no means there yet.
And core inflation, which is when you strip out the energy prices and food, isn't it?
That's right.
That is still what they call very sticky. That's stuck at 6.9%.
I've got a bit of a problem with this. I'm a trained statistician. I was a professional economist before I got into the media game. And I worry about this concept of core inflation. I really do. It is, as you say, Pip, rightly, inflation if you strip out food prices, energy prices, and also some imports, stuff that comes in from abroad, stuff that the price of it can swing around depending on exchange rates between different countries. But, what's the point in looking at inflation where people don't eat, they don't drive cars, they don't, because they do in the real world? I'm much more interested in producer price inflation. I've highlighted that consistently on GB News. Producer prices inflation is now negative. Producer input prices are coming down. We need to see those reductions passed on, because they're passed on if you have a healthy, competitive economy. They're not passed on when the economy isn't competitive, when firms are colluding and doing things that they shouldn't do. Again, I'm not accusing anybody in particular of illegality. I'm looking from a bird's eye view, and I'm saying a lot of these prices in the shops, they shouldn't now be rising less slowly. They should actually be falling, and they're not.